The finance bill has been approved in the Lok Sabha, and apart from the debt mutual fund amendment, there has been an amendment when it comes to the securities transaction tax as well. That seems to have been hiked to 2100 rupees on 1 crore worth of turnover. Earlier, this number was around 1700 rupees. So on a percentage basis as well, there has been a hike which has come in. Earlier, the levy was 0.017%. That has now gone up to 0.021%. So on an absolute basis, the amount is still small. But nonetheless, given the fact that STT has been increased by around 25%, just wanted to highlight as to what the amendments have been in the finance bill, because STT on options have been increased on 1 crore turnover. Now the value would be 2100 rupees, and that would eat away on a bit of the margin that the traders were making in terms of the profits, because now the levy would be at 0.021% as compared to 0.017% that we had seen earlier. So a couple of big announcements happening as far as finance bill and amendment is concerned. There is this chatter on the street as to why they were brought directly at the amendment stage and why they were not tabled at the time of budget itself, because the debt mutual fund amendment itself is quite a major one, having implications on long-term capital gains as well. And this another another amendment coming in with respect to STT on options, which has been increased by 25%. The percentage looks very large, but on an absolute basis, the amount is just around 400 to 500 rupees, which has gone up on a 1 crore worth of turnover. We'll try and connect with a guest to just try and understand what could be the implication as far as this is concerned. I think we have with us Mr. Chandan Taparia joining us to talk to us about the traders' take on the same. Okay, so we are trying to get that patched in the meantime, but given the fact that there is a bit of an amendment happening on the STT, the absolute amount is not too much, but the variable or the spreads that the traders used to make will get narrowed, because people trading in heavy volumes are the ones which will get impacted on this, because it's coming in on turnover of over 1 crore rupees. The small traders who trade in less than that amount shouldn't be getting impacted by a huge amount as far as that is concerned. We'll try and quickly connect with Chandan Taparia to get a sense from on the ground, from a trader himself, to tell us what does it really mean for the market, and would it impact in any way the volumes or their decision making, etc. But at the moment, it seems like we'll try and connect with Chandan Taparia in just a bit. Okay.
Yeah, I think Chandan is connected, Anisha. Let's just go across to him. Chandan, what does this actually mean in terms of the STT? We are seeing an increase there. What does it mean for you now there?
Yeah, so as per the recent updates, we are getting, there is some change in, there is some amendment regarding to the STT, and especially this will be applicable for option writing. So because of this, no need to worry for those who are option buyer or people who are retail mindset, they keep on buying option. But the concern is that those who are high frequency traders and those who are selling options on regular basis, so there will be the decline in their yield, because if your cost of STT increase by 25%, your yield will decline comparatively. So I think sentimentally this is negative. There might be two effects based on it. First, trading volume slightly may decline for short-term time period, and second, yield will decline for those who are the HFT and algo traders. So that is the negative news for those who are actively trading in the option writing segment in the market.
Okay, so that's the take coming in, that the high volume traders are the ones which will get impacted by this. But we also have Ajay joining us in the studio. But just before we do that, Ajay, your take as far as this decision is concerned, it's coming in at a at an amendment stage directly. It's not a huge quantum if you look at it on an absolute basis, but the percentage hike is quite substantial.
So I'll tell you, I spoke to a lot of people on the street and who are into options trading a lot. We need to take a step back and ask ourselves that what is the objective of this kind of a move. As if you would have observed, angel broking, for example, data which they release after every quarterly earnings, you would have seen that cash delivery based trading versus the options trading, FNO, and then within that options trading was seeing a very big departure. The percentage of people in the market who are active on delivery, cash delivery, trading or positional trading was dropping. And the people who are participating only in options trading, almost kind of getting into the zone of gambling or trying to make easy money every day, it was seeing a very sharp kind of a rise, even at a stage when they did not understand this particular instrument so well. So what happens? There are two things. One, you land up, many of them land up making big losses. There are few who make big profits as well, but then it is not a scientific way of approaching the market. But still, there was a kind of tendency, and the numbers are showing very sharp surge. So the regulator now wants to put in check that people who are attempting this kind of trading understand the product well before. So it's making prohibitive for people who are taking it lightly and jumping and just using it for very easy money. So they're making it slightly more prohibitive. Chandan, you must have seen it. A lot of trading was happening even when they don't understand option trading doesn't mean kind of returns on a daily basis on a assured. That was the kind of mentality also some of the investing world was trending towards, isn't it?
What the point you mentioned highlighted here. What we noticed in last couple of years, especially after the COVID, that many Robinhood came into the market. Those who are trading in options, even they don't know what is the property about the options. Even in day-to-day life, we meet to many traders. They keep on averaging the options on declining prices. Or even we have seen many people who buy deep out of the money options with the view that some magic and lottery will happen. So such kind of regulatory act are just to restrict their mindset that cost is comparatively high, so they should not do. And what I add here, that the regulator has to do something. They need to keep some framework that if someone has passed certain cost of the derivatives, then only people are allowed to trade in the option segment. If that happens, then I think the aim of the investor protection will be shot by the regulatory. So I totally agree with you that yes, many people who don't know even the property of option, they hear from someone that this option has gone double, this has gone triple, this is the expiry trade gone multiple times, and in that hope they keep on trading in the market and they keep on losing. This is happening in the Indian option segment.
Thanks for explaining that, Chandan, and for your time. Let's take a short break. On the other side, we'll take the action forward.